today's topic, for those of you who've been following along with us for the last 6 sessions, I think this is session 5 actually. This is Express Capital Financing and Hubzu. We have teamed up to really educate our followers, our clients and everybody else in between that's just looking to be educated on the processes of investing in real estate, whether it's by doing foreclosure properties, buying them on the auction using Hubzu.com, and how the financing kind of ties into all of this. So the past couple of sessions, Mike, really gave us a whole lot of info on the best practices of using Hubzu, how to locate certain types of deals, how to really understand the verbiage that you're seeing. So we got good insight. We now know how to navigate through and find the deals that make the most sense for us. And today, what I hope to share with everyone here is how the financing side of all this works, right? So now you found the perfect deal. You're on Hubzu's website. I love the deal. What do I do now? How do I go about funding that deal?
And before we jump in, like the invite said, how bridge lending works, how bridge loans work. And this says hard money, and people say private lending and those things. Why don't you just give a kind of a primer on because they're all basically the same thing. I think it should say like the easy money guide for real estate investors.
Yeah, it kind of is one of those things. And the way that they kind of called it hard money to begin with, there was a reason for it, right? It's not because it's hard to get. It's actually one of the easiest real estate loans to achieve. The reason for that is we're actually kind of going to cover that in today's topic, because Mike brings out a great point, right? Bridge financing, fix and flip financing, hard money loans, private lenders. These are all terms that people are so used to hearing, and they might think that they're all different types of products. And there might be some differences here and there, which we'll cover. But for the most part, they're all the same thing, right? The only reason it's called hard money is because it's based off of a hard asset, but it's actually one of the easier types of deals to get. And so without further ado, I guess I'll kind of get into it because we're going to break that down and give you guys some more info. And by all means, if anyone has any questions, do put it in the chat. I love when this is interactive and we get to hear more from everybody else and hear what you're looking for so we can help give you the information that you need. But real quick introductions. You have myself, Max Chera. I'm from Express Capital Financing, Director of Sales. I kind of help manage the sales teams, making sure that they understand the products, making sure that we're giving them the right information, marketing and teaching, and going over and speaking to you guys to give you guys all the education you need to make the best decisions. And then you got Mike, who's just a wealth of knowledge when it comes to understanding auction properties and how to achieve them. So we'll go.
Yeah, I've been in the auction business for, 17 years now. I'm a licensed auctioneer in Texas, and I've been marketing auction properties, whether foreclosure sales or REOs or arm length, luxury properties, commercial real estate, during my career. And right now I'm working at Altisource, which is the parent company of Hubzu.com. And Hubzu is a real estate portal where we have thousands of properties that are in those types of sales. Some of those properties are from wholesalers. Some of them are from private sellers. The vast majority are bank-owned REO properties and foreclosure sale properties, and that's where a lot of investment opportunity has been since the big financial crisis back in 2007 to 2015, arguably, right? And where they'll continue to be. And people do get foreclosed on, people lose jobs, people get divorced, people die, houses go into default, and this Hubzu is one of those platforms where you find those properties. So let's jump in.
Yeah, and just to add in there, I mean, the amount of time that you spent in the space particularly is really relative, because what most people don't realize is real estate's the same thing, just in cycles, right? So if you're in the industry for 7 years, you've probably experienced all 4 cycles that you would see in a real estate market. So being in there for, I think you said 20 plus years?
About 17. Yeah.
17 years, yeah. So I mean, you've probably seen it 2 and 3/4 of a time,
Well, I started in it when it was crashing, right? And so, and that's when everything just went bonkers, with REO auctions. And back then it was ballroom auctions, right? The foreclosure auction would come to town and it'd be in St. Louis, and then it would be, in Florida, and then it'd be in DC, and then it'd be in New York, and then it'd go down to the Carolinas. And we had semi trucks, full of equipment going from place to place and doing these big ballroom auctions. And that's when e-commerce was taking off, beyond just Amazon. And it all shifted online. Those foreclosure sales still happen out on the courthouse steps in a lot of places. But the rest of these auctions are happening, online, and even the ones on the courthouse steps, you're starting to be able to bid from your computer and not have to be out there in person. So it still continues to be an exciting time as technology makes these very kind of antiquated sales models more efficient, and it really, I hate the word democratizes it because that's an overused term, but it democratizes real estate investing to where you can own properties just about anywhere. They don't have to be within an hour drive. I mentioned before this call started that I'm in Texas. I'm in Austin, Texas, and I own exactly one house in Austin, Texas. But I have 6 rentals in California and I have 4 in North Carolina, right? And the ones in North Carolina, I've never even seen them. They're in Fayetteville. I've never been to Fayetteville my whole life. I bid online, I bought them online, and it's a strange time in real estate, but you have the ability with technology, and just with Zoom, that's how I've seen these properties. I have a property manager that goes in and they show me the AC unit that needs to be repaired instead of calling me and saying you need a new AC unit. It's $3,500. It's like, oh, that's really from like 1984. We do need to replace that one. Okay, let's get rid of that thing. So technology has a way of enabling investors to not just send out money and hope it works out for the best, but be an active real estate investor and participate in the real estate investment market, and leveraging capital from private money lenders like Express Capital Financing. We'll get into the details on that, but that enables you to do so much more. So let's talk about this hard, kind of easy money.
Let's do it. So just really quickly, guys, just a quick disclaimer. Today's presentation is not to be taken as any legal, tax, or accounting advice. Do reach out to your lawyers, accountants, CPAs for any information, verify anything you heard, or just want to make the best decisions. We're here just to educate and give over our opinions on what we feel and see in today's market. So today's objective, right? A couple of things that we want to cover today is, like Mike said, what is hard money? When do I want to use hard money? How does it actually work? What do terms look like for it? What do we need from you as the borrower to start working on your first deal? What do we as hard money lenders look for in your potential deals? And how to just find the best lender to work with for yourself based on your needs, your criteria, and your processes. And then as a little extra, we're going to show you guys again how to use the hard money calculator so that you could go ahead and start to project your own profits and underwrite your own deals straight from home. Like Mike said, technology is massive, so utilize all the little tools that you're starting to get to advance your processes.
I think the easiest question to answer there is what situation would one use hard money? And as an investor, it should really be every situation, right? I mean, you're going to see the math on this, but like if you have 250 grand in the bank and you want to buy and rehab a property, you're going to put all of your money into that one basket, right? And when you're working with a private money lender, they're going to give you the leverage, and that's going to be a key term you're going to hear today probably. And it's going to come from Max, not me. But it's going to give you the leverage to not just do the one deal, but to do multiple deals, but also to have that capital as a backup when other investments come up. There's nothing worse than having all your money in one investment and then the opportunity comes up that you just can't pass on, but you have to pass on it because you didn't prepare for it. So that's the easiest question that'll be answered in this whole webinar.
Absolutely. And keep in mind that word leverage, because we are going to use it a lot. So let's start off with what is hard money loan, right? That was Mike's first question. He was like, guys, why are you writing hard money, right? And it's, again, super important to understand because it's not a hard loan to get. It's actually super easy. The only reason that it's called hard money is because it's asset based. It's based off of the hard asset, which is the real estate property, right? So hard money loans are typically only used for real estate investors for short-term projects, right? So when we say the term short-term projects, that means either I'm buying a property and I want to flip it as a fix and flip, or maybe I'm buying a property that needs work and I'm going to refinance it and hold it as a rental property, right? Again, if I'm buying something today, the only time that I would suggest you don't use hard money is if I'm buying a property today, it has cash flow, there's a tenant in place already, it's maybe new construction, maybe I just, it's in great condition, I don't need to do anything. Yeah, there are definitely some other programs that would be best suited for that type of deal. But what we're talking about here is something where I don't plan to hold this property for long, or I don't plan to hold this loan for a long time. And why is it, important for the BRRRR strategy, right? The buy, rehab, rent, refinance, repeat, is because I plan on improving this property's value. So I don't want to hold this loan for so long because I can get myself into a position. I'm practically restructuring myself to be in a position to get better financing. So I want something short term because the cost that it'll cost me to do a hard money loan and refinance is worth the reward of what I'll get once I refinance it, whether I get a cash out, whether I get a better rate, or just have a much better cash flowing property. So how did hard money even start? Where did it come from? Mike was talking about how he started during the crash. Well, hard money started during the crash as well, right? Because there was a large, lenders realized that there was a large percentage of people that were buying these properties. They were fixing them and selling them, but there was no way for them to actually go ahead and leverage themselves when buying these properties. If they went to their traditional bank, whether it's a mortgage lender bank, whether it was your traditional Chase bank, none of them had a program or would be willing to even lend on a property that was not in good condition, that did not have cash flow, that they did not qualify for. But here there were actually properties that people were coming out and making profits on. And they realized, okay, well, there's another section of real estate that we have to cater to and serve to and make sure that they have the ability to leverage themselves because they're sitting here making money. So lenders woke up and they realized, hey, let's fill the void. And these lenders that we're talking about are, generally speaking, your private guys, right? People that maybe they have built up a lot of money or wealth in real estate, and then they started to realize what other investors were doing and they had the capital to finance them. And then you started to see people, starting to build bigger types of businesses or funds built to help these investors. So that was where all of this started. There was a massive opportunity, and the right people seized it and took advantage of it.
Well, and the other thing to point out on that is that, to get a conventional mortgage that like Fannie Mae will buy or something through a regular bank, the property has to be in a certain condition. So all these foreclosures that were coming to the market, people had been paying their mortgages for a couple of years, and when you don't pay your mortgage, you don't take care of your house very well in general, right? And so you have these properties that are adversely conditioned, and sometimes they're occupied by the former owner, need to be evicted, and a private money lender can loan on some of these properties because just because you need to repair the roof, that's part of the rehab. That's not part of, but if you have to repair a roof, you have to do it before you get a conventional money loan. And so you can't buy that property. And the person who's trying to sell it, which is basically the bank, they're not going to do that kind of repair on it. So you either come in all cash or you use a private money lender.
Exactly. And some of the best properties are the ones that are in the worst condition, right? Because as somebody that's experienced and understands construction and whatnot, I would much rather do a gut renovation where I'm changing everything. I have already accounted for my expenses to redo all of the plumbing. So worst case scenario, I'm already redoing it. Best case scenario, some of it's good and I can keep it. I save some dollars, as opposed to the opposite when you're only saying, well, maybe I'll repair the plumbing, and then you open up the walls and you're like, well, I actually need to replace everything, right? So a lot of the times it's actually more valuable to certain investors to be able to do more work when they're completely gutting something. So they want the worst possible property. I want you to give me the fire damage. I want you to give me the ones that need the roof is caving in, because those are the ones where I'm going to be able to bring the most value, sell it for the highest dollar value, and do the quickest work. So why and when would somebody use hard money for real estate investing? It's a simple, easy process. And guys, remember, time is money, right? The more especially in the sense of when you're sitting down with a lot of these sellers, right? You're in front of John Smith, who's talking about, hey, I can't meet my mortgage payments and I need to sell this property. And you're trying to buy it at a discount. Well, if he's going to sell it to you and it's going to take you the same amount of time to close as it would take a home buyer who's going to live in that property, who's can go to a bank and get a regular traditional mortgage, and I'm going to pay more for it because I'm a home buyer. Well, why is he going to sell it to us, right? So as investors, we need to have an edge in order to get those discounts. And that's where the ability to close quickly is a big part of why hard money is so important in today's market. It's
Well, and
manageable.
it allows you to leverage lending without having to go all cash, right? And so like, there can be an all cash buyer. Let's say, Max wants to buy this house for 200 grand and fix it up and sell it for 400, and I want to do the same thing, but I only have 50 grand in cash and he has 200 grand. If you have using private lending like this, using hard money, you're basically a cash buyer. It's the same exact thing. And it depends on who's going to close more quickly or who's like the person that seller likes the most. So it gives you a lot of advantage over a home buyer for sure, but against other investors as well.
100%. And we, by the way, have seen that a lot. We have investors where if they know the area, they're not worried about something popping up out of nowhere. They will make it a cash offer. They understand their risk, but they will make it a cash offer knowing that they're actually going to get our financing. And again, that's up to each investor and obviously understand what that means and make sure that you've checked all your crossed all your T's and dotted your I's before you do so. Another real big reason is it's manageable. What I mean by that is it doesn't affect your lendability. If I go to a bank and I get 5 different loans for 5 rental properties that I have, each of those properties is now reporting to my credit. It's now affecting my DTI, my DTUs, and the next time I want to buy a property, that's going to be affected. When you're going and getting a hard money loan, none of these loans get reported to the bureaus, which means that each one of them is their own independent thing. You're able to scale this as much as you want. Lenders like Express Capital Financing, we do not put a cap on how many loans a borrower can have with us at a given time. We offer what's called unlimited financing because we understand that the way that you scale is by doing more and more projects. So we're here to help facilitate that, make that all possible. But keep in mind, this is all a numbers game. The more projects I can do, the more I can leverage myself, the more money I'm going to make. And then let's look at those 3 words that it says right below there: leverage, 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 right? I won't forget when I first got into real estate, I heard this, I thought it was a funny joke where somebody said, I'm addicted to opium. And I was like, what? And he's like, no, not the drug, other people's money, OPM, right? And that's exactly what it is, right? The more I can use other people's money to make myself money, the more I can leverage themselves so that I have less risk and skin in the game at any given time, the more flexibility I have, the more risks, more calculated risks I would be willing to take to help scale my business and to help scale my portfolio. Lenders, we understand the game, right? We are not your traditional finance people where we're talking from a finance perspective only, and we're only looking at it, well, if you pay this, you're going to cost you that. No, we understand real estate. We understand the fix and flip game. We've all done it to some extent and have lived in real estate for over 10 years. And we can give you that second set of eyes. We see these fix and flips happening on the daily. We're underwriting hundreds of files to see where people went wrong, where they went right, how they were more profitable, how maybe someone got stuck in something that looked really good, but we didn't realize this. And we can share that information with our borrowers to ensure that they are in the best possible situation, right? Nobody likes to just, it's funny, like we all trust ourselves a lot, but yet we always go to somebody that we trust to make sure that we're doing the best decision possible, right? So who better to go to than the people that are looking at more files than anybody else when it comes to making sure that they're going to be profitable. We got a couple of questions that did come in, and the only reason that I'm actually going to skip over them for now is because we are actually going to answer those questions very soon. So stay tuned, Monica. And then for Phyllis, yes, we are recording this and we will be sharing the PowerPoint with all of the attendees.
I've been answering some of those as well. So,
Okay.
and mentioning that we're going to get to a bunch of those questions. There was one that came in from Monica. She was asking about attorney fees as well. So I don't think that's being addressed, but we should think about how we can answer that.
Yeah, so I do plan on getting into that when I share the calculator. So we'll get to that. But if you do see a question that looks like it should be answered on the spot, definitely stop me and let me know, and I'll make sure that I get to it. So this is a little bit of a repetitive slide, but we'll mention it again. So like the top 3 reasons why people use hard money for their investments is the timing, right? My ability to close quickly, my ability to even get to the project faster, right? It's not just about closing quickly, it's also about completing the work, right? If I am funding the rehab on my own dime, and maybe I have a strong W-2 salary that's helping me do that, but maybe I'm in a crunch now and I don't have enough funds now to do it in 3 months, but I have enough funds to do it in 6 months. Well, guess what? You just lost some profitability on that deal now because of how long it took you, because you have overhead costs, right? So it's not just about closing on time, it's also about selling the property as soon as possible. The approval criteria, making sure, properties that, they're just not going to get approved anywhere else that you go, and hard money or private lenders are the only options for it. And flexibility is, again, I've seen it time and time over again. There's a saying, man plans and God laughs, right? Every time we have a plan and we think it's going to go perfectly, things come up, right? So hard money does offer flexibility in order to making sure that, we are able to complete things through. We're not just, we're people that can be spoken to. We pick up a call, we answer emails, to making sure that, the linoleum is not available and you got to switch it over to this type of, material. Okay, let's help you do that, right? So just knowing that there's flexibility in how you proceed with that process is also important to know.
There's a couple other questions that popped up. One is there a prepayment penalty?
No, there is no prepayment penalty with hard money, right? So the faster you complete your project, that's why it is so important that you understand that, because the more money you will make. I do not have to guarantee any percentage or minimum interest on a hard money loan.
The other question was, do you or other hard money lenders loan against vacant land? As an architect, that's what I would invest in, then get approvals, and then either build or sell with approvals.
So Express Capital Financing does not lend on land per se, and I'll add on this in just a moment. We do lend on ground up construction, but we do not lend on land, right? So that means that there needs to be a plan in place, meaning there's plans and permits, and you're going to build on that property. And then, yes, we do have a product for that. And it's very, very similar to our fix and flip financing. So for the most part, you could take about 90% of what we discussed today and transfer it over to ground up as well. However, if somebody is buying land and they want to do a bridge loan on that, wait till they get plans and permits and then reapply for a construction loan. There are lenders that will do that. They're called land lenders. Unfortunately, Express Capital Financing is just not one of them.
And then someone was asking, could I get a hard money loan for occupied properties? I think there's 2 different definitions to occupied. One is occupied by a tenant, and one is adversely occupied, like some of these foreclosures that turn into REOs.
Yeah, so when it comes to the occupied properties where they're like you mentioned, the second one, which is they're occupied maybe by squatters or just people that aren't paying their rents, it's adversely to the seller's will, then we can lend on those properties, and we can also lend on them if they are occupied. We've seen many different I've seen many different strategies. I know some people like to buy occupied properties. They'll buy, let's say, like a 3-family where 2 of them are occupied right now. They'll fix one of them, move one of the tenants and charge them a little bit more in rent. And then they'll do the second unit, move that third one. And then by the third time they're done with the third one, they could already even refinance it, or they could, push the tenant in. So yes, we can lend on those. It's just important to understand that what your strategy is and how you're going to navigate it, and talking to the tenants, right? Have a conversation with them. Hey, do you plan on staying here? If I was able to fix this up and make the property look like this, would you pay Y amount in rent? Right? So having those conversations is only what's going to help you be more successful. But yes, Express Capital doesn't have an issue with anyone doing occupied properties.
And then Monica had asked, how does Express Capital compare to other hard money lenders? What type of loan terms do you offer? I think we're going to get to that, right?
Yep, we'll get to that.
You'd ask also, what are signature seller properties on Hubzu? And that's a category that has private sellers. So people that are selling a property that they own, it's not a bank and it's not a foreclosure property. A lot of times those are wholesalers as well. So you'll see properties that are up there for 20 or 30 days where a wholesaler will get a property under contract and then sell that purchase contract. And those are great opportunities as well. So we've been seeing a large uptick in wholesalers listing properties on Hubzu, and that's what the signature seller properties are. Someone said, can I borrow, Michael Harris said, can I borrow money for houses for rent in bulk?
Yes. So that would probably be a different product I would offer. So if these are all like stabilized properties, meaning that they're rented out or they can be rented out, we would probably give you the portfolio loan that we have, which is for rental properties. It's a 30-year product. It's not a interest only like hard money. Rates are definitely much better because again, it's a stable property. But if it's a bunch of properties that if you're looking to buy a portfolio of properties that you need to do work on, we can do that as well. So actually, I guess both ways, the answer is yes.
These questions are coming in, which is awesome. There's a ton of them. One of them is from Avi. He says, do you offer DSCR products? And I think when we talk about the different loan types, you'll cover that.
Yeah, so I'm probably not going to cover that on today's conversation because they were supposed to be focused on hard money. But Avi, yes, we do offer DSCR products. That's what I'm referring to when I say our stabilized property program is a DSCR mortgage, which stands for those that are not familiar, it stands for debt service coverage ratio. So in very short, I don't want to spend too much time on this, but in short, if it cost me my principal, my interest, my taxes, and my insurance, say $1,000 a month for the loan that I'm about to get, and I'm collecting $1,200 a month in rents, now that property will qualify for financing because I'm covering my expense ratio.
And you know, we got a great question from Patrick here. There's so many questions that are coming in. I think we should move these to the Q&A session. He asked,
okay,
really interested in listening to the presentation. Can we answer the questions later?
Yes,
so
let's do that
towards the end. And I think we'll try and do that. If some of these come up as we're getting to the proper slides, we'll bring them up at that point.
Fair enough. So now we're going to talk about how hard money financing works, which I think is going to answer most of these questions that we started to get. So time is of the essence, as we all know and mentioned many times already. So as a hard money lender, we specialize in underwriting and closing these files really quickly. It can take us as little as 2 days to really to underwrite and approve a loan for financing, and can happen and it can close in as quickly as a week. Now, keep in mind when I say it can take us as little as 2 days, it means that once we have a full packet together, we can review that file within 2 days and approve it, right? So generally speaking, the average timeline is about 2 weeks from when we start the process till we close a loan. Where does the actual money come from? It comes from private lenders, right? So we as ourselves started to first use our own funds to go ahead and lend all these investors money. Now, eventually got to a point where, hey, look, we need to leverage ourselves also, right? So we actually also go out there and raise money from the market for people that say, hey, this is how we're going to this is what we're financing, and this is what you're a part of. And we're actually going to be, hopefully in the future, releasing a public fund where as long as you're a accredited investor, you can get involved and invest with Express Capital Financing. So what are the responsibilities of the hard money lender, right? So we need to underwrite and service a loan. We need to make sure that the numbers look good, the property looks good, making sure that there is a plan in place that makes sense, making sure that we're servicing the loan. Servicing the loan, I'm going to skip 2 bullet points down and say it's even dispersing the funds, right? When I say dispersing funds, I'm talking about the draws, making sure that, hey, when I finish the kitchen, which I allocated $10,000 aside to, I can actually receive those funds. And for us, it's also a matter of protecting our borrowers by making sure, hey, did the contractor complete this work? And are we paying him for something that is completed? Or is it 3/4 of the way and there's still things that need to be done? And if he doesn't do it now, it might never get done, right? So making sure that we service the loan properly, making sure that we screen our borrowers, making sure that they have the capacity to complete the project, evaluating the properties. I mean, when it comes to evaluating properties, I could talk about that all day. There's always different things like CMAs are one of the trickiest things I would say in real estate, especially in certain areas. I'll take that back. Certain areas. Sometimes you have cookie cutter properties and you could tell right away, hey, if this one sold for 200, mine's going to sell for 200, and there aren't really any questions about it. But there are definitely many markets where one street, if I'm across this main roadway, I lost 10% of my value off the bat just because I'm not in this highly wanted area, right? So understanding the markets and being able to read through the appraisals and understand what they're commenting and what it's about is a very big point. There was actually a time where we were working on a deal, and I think I mentioned this one on a different webinar, but I'll say that again anyways. The across the street, they had just got zoning approval to build in an entire warehouse. And this was a single family property that we were about to work on. And when we found out that information, we came to our investor and said, hey, by the way, I just want you to know, they just got approvals to build a warehouse over here. When people start to know that there's going to be a warehouse across the street from them, that's probably going to affect our value. Even though the appraiser said, hey, today it's worth this value, it's worth $300,000 once you do this work to it. Do you think that if somebody knows that, hey, a warehouse is going to open across the street, there's going to be noise, pollution, and things like that, that I'm going to want to be there? It might affect the wantability score of that property, right? So that's where we come in and make sure that we are doing our best to get all the information that we can to make sure that we are getting into a safe investment.
Yeah, I mean,
And
that's
then,
what it happens with any real estate purchase too. You look at the comps and they look fine on paper, and then you drive by the house and there's a guy next door that has 2 motorhomes and a boat, right? You're gonna have a hard time trying to sell that house to a family. He doesn't want to live next to that guy, or biker gangs down the street, or I've seen some crazy stuff where it's like, oh, I look at Camden, New Jersey, right? There's Camden and then there's Camden. There's nice Camden and not nice Camden, right? And they're not very far apart. Streets in Philadelphia, you look in some of these cities and you go from a good neighborhood to a neighborhood you can't rent a property in. So
yeah,
and it might look good on paper, and an automated valuation model might say, hey, here's some great comps, and it can look really great, but yours is the bad one. So that's why you want that second pair of eyes, and you want people to walk the street, and you get someone in the property to look at it. It's really important, really important.
1,000,000%. So where does the actual capital that we have get deployed to, right? So just to make this super clear, the loans go towards the purchase and the rehabs of the property, right? So we're not funding closing costs, we're not funding other things, we're funding specifically the purchase of the property and the renovation of the property. Now, this is done in a first position lien against the property, which just means that there is nobody before us, like you didn't borrow or have another mortgage on that property before we got there. And if there is, it's being paid off with our loan. And then we use the rehab funds, which comes in the form of draws, is to complete the renovations. Now, keep in mind that this is dispersed as work is complete, right? So for example, generally speaking, and there's many ways that this can be done or negotiated with your contractors. Number one is we give the draws to the investor. We don't send this money to the contractors. That is not our job. We send it to the investor and they go ahead and pay their contractors as they see fit. But there are so many different variations of people, meaning I know some of our clients that are actually the contractor on the job, right? So they have their team go and they complete the project, and then they come in for draws as they need for the materials that they're doing. Or maybe they'll just, have some speed with that, right? So they're taking care of that. Some people where they're not contractors, I'm a regular investor, I just know how to manage teams really effectively. And I have a really good GC that I work with, and he takes care of all this for me. Fantastic, right? So, hey, GC, what do I need to get started with my project? How much money are you going to need for me to start work? Do I just buy you the materials, you start, and then as you complete, I pay you? Do I need to give you a deposit, and then as you complete, I pay you? Maybe if I'm buying the materials, I've seen people do it in creative ways where they'll buy materials on their Home Depot credit card, drop it off at the property, tell Mr. Contractor to start work, and as they complete it, they'll get remit payments. So it's really up to the investor. And that's why we don't have liquidity requirements on this, because as long as you have a plan in place and it makes sense, we're okay with that. But take the time to really think about how you're going to start the work, right? Don't be purchase broke where by the time you completed the purchase, you don't even have money to send somebody in there to start getting work done, because as lenders, we need to protect ourselves and make sure that, hey, if we're going to release these funds, it's going to go into the property, because if we have to take it back over, now we've lent more money than it's worth in its current condition, and we're stuck with it, right? So make sure that you have the ability to start work, and know that as you complete each line item is the way we say it, because you actually have like a sheet where it has kitchen, changing cabinets, $5,000, new stove, $2,000, whatever it is that you're doing, right? So as each item is completed, you can request those line items, and you can do them in percentages as well, right? Hey, I painted half the house. Well, we'll release half those funds to you.
Yeah, and there's some third-party companies that will manage that process for you as well. The whole kind of rehab process. Max was talking about a GC, a general contractor that you trust, right? When these guys get really busy, sometimes they put jobs on hold and they work on jobs that they make more money on. And, you really need to make sure that you have your kind of ducks in a row. There's a company that's part of Altisource that is the parent company of Hubzu, called Granite Risk Management. And they help manage the contractors, and they confirm that all the work's done, so the private money lender can pay the draws, and they act as kind of a middleman there to make sure that your contractors are doing what they're supposed to do, or they get replaced, right? And they don't get paid. And when a contractor knows that, oh, I'm not going to get paid on something, they usually tend and come and do the work. And so if it's something that you don't have the time to do because you're a dentist, right, or a doctor, and you're busy in surgeries or fixing broken ankles or whatever you do for a living, you could be an executive at a company, you just don't have time to manage all these things all day long, but you want to be in that game. You can have someone like that company, Granite Risk Management, manage that process, and it gives the private money lender the proof that they need that this work occurred, so that someone can get paid.
Yeah. And then lastly, another way that the hard money loans work is that the payments are interest only. And that's just in order to keep your monthly overhead as low as possible. You pay the principal off when you sell the property or refinance it. While you're in the loan, you're just making the interest payments on it to help that, again, keep the overhead low.
That's huge. That is huge.
Yes.
And the different examples, I'm hoping you can give an example of what a payment would be with principal versus what it would be just interest, because it's a dramatic difference, just to keep your cash flow, flowing and not stuck in huge payments for, 6 months or 12 months or however long it takes you to do the rehab on that property.
Absolutely. And that's a good idea. I'll open up our calculator, so when we get to it, I can actually show both of them side by side so we can see how that works. So let's talk about loan to values. Like, how do we consider properties? What are we looking at there? And the whole LTV phrase is kind of confusing. I know a lot of people get stuck on this. And the reason is because loan to value does not necessarily refer to any particular value that we're looking at, right? There's many different values. There's the amount that the property is valued at today. There's the purchase price. There is the amount that it's going to be valued at. So there's really 3 or 4 different types of loan to values that I could look at. Which one do we care about, right? So we'll talk about the different types in the next slide. But for right now, what we need to understand is that loan to value is literally the loan amount divided by the value, whatever value that is. We'll go into that. So in this example, right, if I'm buying a property for $100,000, generally most investors are putting down about 10% down on their purchases. That means that in down payment, I need to bring $10,000 towards the property, and I'm going to get a $90,000 loan, right? So it's the percentage of the value that I am borrowing and putting into this property. So now how do we understand what information do we need to properly understand the LTVs, the ARLTVs, and even LTCs, which is kind of the same thing, but it just stands for loan to cost, right? So the value in that equation would be the purchase price plus the renovation instead of the purchase price by itself, right? So in order to figure this out, we need three figures. We need to know the purchase price, how much we buying the property for, how much are we going to invest in the property as far as renovations, what needs to be done to it, and how much am I going to be able to sell this property for once this work is completed. Once we have these three figures, we can now go in and understand all the other percentages. So here's our example. Now, this is based off of a 10% down payment or 90% loan to value of the purchase and 100% of the rehab. So in this equation, and I'm actually going to, let's go through this first, and I'll share my other screen in a moment. So the purchase price here is $200,000. I'm buying my property for $200,000. I plan to put $50,000 in renovations into the property, and I am going to sell it for $375,000 once the work is completed. So that means that if I'm borrowing 90% of 200,000, initially the lender has given me $180,000 towards my purchase. There's $50,000 set aside for me to do the work with, and my total loan amount now is $230,000. So if I take $230,000 and I divide it by 375, that means that compared to my future value, right? Not my today value, my future value, I am borrowing 61% of what I'm going to sell the property for. I borrowed 90% of what I'm buying it for today, but I'm borrowing 61% of what it's going to be worth. That means that there's 40% of a spread that I can use as profits. Now, again, it's not all profits. We'll go into that in a second, but there's 40% spread. Now, loan to cost is the following, and why it's important is to understand this. If I'm borrowing 90% of the purchase and 100% of the rehab, that means that I'm really borrowing more than 90% of my entire project, right? Because my project cost is $250,000 and I borrowed $230,000. That's actually 92%. So if I were to do this deal all cash, I would need 250, whereas today I only need 90% of 200 or 92% of the 250, right? So 8% of the deal is all my skin in the game. That's phenomenal. And now we'll get into the cash on cash return actually right now with the profitability. So I'm going to take a moment to change my screen and show you guys my personal little calculator, which is all available to you guys on my website in a different format. I'll show it to you guys in a moment also. But this is a really cool way to really understand the numbers. And I'm going to help you guys navigate. I know there's a lot of numbers here in front of you. This is not confusing. This is actually super, super simple, right? So again, we're taking the exact same scenario. We bought it for 200. We're selling it 375. My renovation's $50,000. And I'm going to,
You're basically, you'd only put numbers into these yellow parts, right? That's how this calculator works. So like, let's point that out. All these other numbers are calculated for you. So you only have to put the numbers in the yellow ones. So that's why he's saying it's super easy.
Yes, exactly. I should have said that. Thank you for clarifying that. So anything in yellow is a variable, right? What's my interest rate, my points? If I'm in a state where I have mortgage tax, what is it? So again, I'm just taking accounting for an average deal that I've worked on. Everyone should, slightly tweak this, and that's why you'll have access to this to set your own numbers and make sure that your deal is calculating properly. But in this situation, we're just going to take this. I'm paying 4% for my broker fee and things like that. And it's important to understand that, because when I acquire a property, what this sheet is doing is it's taking all these numbers that I filled in and giving me now in dollar form how much I'm spending on each little item. So, right, my purchase price, I have to buy the property, I have to pay an attorney to represent me in some states to close the file, my recording taxes, filing fee to record the deed, the underwriting fee, let's say for your lender, an appraisal, which is probably less. This was edited back when COVID was in peak, so prices were real high. I'd say it's probably closer to 600 nowadays. Your private lender's legal fee, title insurance, and the points, the origination points, which is what we charge, which we'll get into in a moment. So it's showing you that, hey, to buy this property is costing me $214,000. While I'm holding the property, it's going to cost me about $80,000, which includes the $50,000 of renovations. It's including my interest cost, right? Now, remember, guys, what I told you, the faster I get a project done, the more money I make. So if I hold this loan for only 6 months instead of 12 months, all of a sudden I went down half of my interest cost. I made an additional $12,000 on this deal because there's 6 months worth of interest that I do not have to pay for now. So time is money is as accurate as it gets. Let's put it back just to go for
It's a
that.
great opportunity for sweat equity too, right? Where, you know, you might have some contractors that are doing some of the hard stuff like the plumbing and electrical, and but you can be in there painting, and you can be in there you know, doing some of the work yourself to expedite, you know, that rehab process.
Yeah. And sometimes I'll pay more to a contractor. If I get two quotes and one of them tells me it's a shorter time frame than another, I would pay more money most of the time for that guy to do it faster, because overall he's actually going to save me money, because now I don't have a higher overhead to pay. So it's not just about the lowest, the cheapest offer that you get. Sometimes the best offer is actually slightly more expensive. When you sell the property, there are some fees, right? I have to hire a real estate broker to represent me, market the property and sell it, right? So we have to account for that. We need to account for transfer tax that's usually charged to the seller of a property when you transfer the deed. Legal fees, you may have an attorney represent you in some states, and filing fees for the deed as well, right? So first off, the first thing that I kind of want to show you guys, which I think is important, is that a property that I'm buying for 200 and putting in $50,000 doesn't really cost me $250,000. It actually cost me $313,000, right? So it's not, you can't look at it from, I'm selling for 300, I bought it for 200, I put 50 and I made $50,000. No, there are other costs that come into it that we need to account for to make sure that your deal is profitable. Now, what I want to really show you guys is a really easy way that this is gonna be beautiful. Remember when I told you guys leverage, leverage, leverage? It's a numbers game. The more I can do, the better off I'm going to be. Well, let's think about that for a second. I'm a really smart investor. So I know that because I'm paying interest and origination points and other fees that are associated with my loan, that I am losing money on my deal. I could be making more money on this deal if I use my own cash. And while you might think that's true, let me show you why it's not, right? So on this deal right now, we are projecting that if I borrow 90% and 100 of the renovations, I will make $61,000 in profit, which is, this is the important one, which is 97% cash on cash return. What's cash on cash? Cash on cash means the money that has actually left my pocket. I'm not talking about the $313,000 that it's going to cost me to do this deal. I'm talking about my 10% down payment, my closing cost, and any other funds that I may have spent to actually do this deal, which in this case, right, the cash in the deal at the purchase time is 34%. And the amount of money that I'm going to have in this deal, including my interest payments by the end of 12 months, is $63,000, right? So if I invested, it took me a full 12 months and I invested out of my pocket $63,000, I am making back 61,000, which is 90, almost 100% return on my investment for the money that left my pocket. Now,
I mean, if you think about that, it's kind of like you know, crowdfunding in a way, right? Where, or Huckleberry Finn, right? You're leveraging your smarts to do less like risk to yourself. So like Huckleberry Finn convinced people to paint the fence for him, right? The fence got painted faster and he didn't have to do any of it, right? It's the same thing with your own money. You invest your money and you get more from that money. And if you make this your business, right, and you're doing 10 of these at the same time, you know, you can't do it with your own money. You know, I mean, unless you're super wealthy, and then you should probably join the private lending business. But
let's just say you could, right? Let's take that investor for a scenario, right? And we say, you know what? I'm going to borrow $0 on the purchase. I'm going to borrow $0 on the renovations, right? So now what happens is, I'd say 90% of the costs that are associated with the loan now disappeared in my equation, right? So let's look at what that looks like now. I made $93,000. Max, you're wrong. I made more money. What are you talking about? But look how much money I needed to spend to do that. It costed me $261,000 to make $90,000. If I am the first investor, right? And how much did I invest? I invested $63,000. Let's say I do that 2 times. Now I'm invested in $126,000. I have less than half the amount of money that this investor has in the deal. So I have half the risk that he does. And guess how much I made? I made 120 because I did 2 deals with my money. And that's the important part. That's why leverage is so important. That's why opium is so addictive, because you're using other people's money to leverage your risk, leverage your asset, and make sure that you're able to make more money overall. This investor only made 36% on his money. You made 97%.
In the same
Which
time.
person in the same time frame? Right? Now imagine now I can do that 4 times over with the same amount of money as this investor has, right? Because now I have $240,000 in 4 projects of the same purchase price, right? That means that I made no, I'm sorry. So yeah, same exact number, right? So I have 240, yeah, I have 240 invested and I made roughly 240. Whereas this investor for the same amount of money only made $93,000. Which situation would you rather be in? Right? Now, are there some event, maybe you're so wealthy and you don't care? Sure, no problem. You know, everyone is to each their own. But for those of you that are interested in making sure that you're growing as fast as possible and as safely as possible, right? Because keep in mind, he put 260 in and he has no one to reach out to understand if that project is even worth his while. Maybe he ordered an appraisal, maybe he didn't. But does he understand how to read through it? Does he understand the deal? That's where having that second set of eyes is even more important on top of all that. He needs it more than you do because he has more money at risk, but he doesn't have it.
And the key word there is risk too, because if this deal does go bad, let's say they do put that warehouse on across the street from this real world example, right? And all of a sudden, oh, I'm not even making that $93. Now I'm breaking even. I'm hoping I'm not losing money on this deal, right? Or they rezone the schools, and the school you thought you were going into has a much lower grade, and you're not going to be renting it to a family for 6 or 10 years, and the rent's going to go down. I'm not making that up. I mean, I literally moved into a neighborhood for my kid to go to a specific school, and 2 years from now, they're going to rezone it and they're going to another school, and it's not as good. I mean, I have to petition to stay at the other one. But that's going to really affect some real estate values in my exact neighborhood. So I think there's a line in a future slide or maybe it was a previous slide, that things can go awry, right?
Yeah.
That can happen in any investment. Look at Bitcoin, right? Everyone thought they were all going to be billionaires, and now they're not. But it can happen in real estate. That there can be a downturn or something like that. You have these 4 deals, and you have a higher likelihood of making money, and maybe you make a little less money, but you still made money. If you have just this one deal in this scenario right here, and it goes awry, like things, you could lose money, and then your real estate investing for 6 months or 12 months didn't work. So it's definitely something to think about, and every deal is different. You got to do the analysis on every single property. But looking at a scenario like this, it really highlights that keyword risk.
Risk and leverage. Like leverage is, like you said, it's the word of the day. Like there's no better word to really understand what financing could do for you. One other thing, and Mike, you mentioned this earlier, which was helping them understand the payment differentiation between interest only versus PITI, right? So what I'm going to do for a second is I'm going to actually introduce to you guys also another concept that exists within this lending, which is the amount of money that you're paying on your interest payment is directly related to the amount that you have taken out from the lender. What I mean by that, today, I closed my loan today, right? So that means that as of today, I only borrowed $180,000 from Express Capital Finance, but they have $50,000 set aside for me to take out whenever I need in order to complete the renovations. So am I paying my interest on 230,000, or do I make my payment on the 180,000, right? So the answer is that we are always paying the amount based off of your current balance, how much you've actually taken out from us. If you only end up using $40,000, you are not going to pay interest on that additional $10,000 that you have not borrowed. So to help understand what those payments could look like, I've actually built out a little bit of an as dispersed chart. So now, is this exact like how it's going to look? No, because it all depends on how you draw your funds. We have investors that draw every month, investors that draw once the project's completed, 2 draws, 10 draws, that's completely up to you. What I can show you is, hey, when you're not drawing anything, your monthly payment is going to be $1,650. when I start to take out the first, when I've taken out 25%, right? So these are benchmarks. It doesn't mean that if I take out 12%, I only pay the 1650 also. It's all relative to the percentage. These are just the benchmarks that I set. So when I borrowed 25% of the rehab, my payment would be 1764. At 50%, it would be 1879. At 75, it would be close to 2000. And by the time I've completed all the renovations, it's going to be 2100. So am I really paying a full 11% on the total amount that I borrowed? Really, no. Because if I've stuck with, if I was at 25% for a while, well, really I'm trying to explain that these numbers, there's actually more profits in them because this is accounting for you making a full payment every month, where in reality, that's actually not going to happen. You're not going to complete the work in the first month. And if you did, power to you, and you're going to sell it quickly in the second month, right? So that's how the as dispersed payments work. And it's really important to understand that, so that, because there are lenders that might offer you a better rate, but they don't do as dispersed. They do, it's called full boat interest. And now you're stuck paying a higher payment for a couple of months, which could end up being the exact same amount if you were to get a higher rate with as dispersed, right? So it's not all apples to it's everything in our space is not always apples to apples. That's why it's important to really understand and talk to your lender. Make sure that you understand their terms, how they work. Do you offer this? Do you not? Right? Because we all have our added values that we like to include to give you guys to make sure that you guys are going to be successful. But sometimes if I add one add value, I got to take out a different one, right? So just helping you understand that is important. Now, if we take that same loan and we say, okay, I want to make this a principal and interest payment over the course of 12 months, because that's what we're doing, right? Wait, sorry. I got to open up my calculator. So if I take our loan, which is 200 and what was it, 250? 230, I'm sorry.
230, yeah.
230, and I times that by 11%, right? So it's going to give me the 25,000 addition. So that means that my payback is going to be 255,300, right? My principal plus my interest is going to be 255,300. And if I divide that over the course of 12 months, I'm paying $21,000 a month, right? We understand that that's not something that you want to do or have the capacity to do, especially when you're doing all these deals. So it makes the most sense for us to just charge the interest payments only. And once you have your buyer set up and you transact on it, that buyer is technically paying off the remainder of your balance and you're only taking the profits. And if I'm refinancing and I go to, even if I go to Express Capital and say, hey, I'm refinancing with you and you owe 230, but the new loan is for 250, you're going to get back 20,000 and we're going to pay back off that 230 value with the proceeds of the refi, right? So you never have to come to the table with the actual principal. It's all being borrowed and being transacted properly throughout. I think we covered everything on this sheet that I kind of wanted to show you. Now, for those of you who care to do this on your own, on our website, let me just move this for a second. On our website, you will see that we have the option for you guys to use your own deal calculator. So if you go to the business resources section, you will see deal calculator. We have a fix and flip version, and we have a rental property calculator. If you're doing a BRRRR, maybe you want to use both. You want to see how it would look before and after. If I'm doing a fix and flip, just hang out over here. And if I have a cash flowing property that I want to check out, just go straight to the rental property calculator and it'll help you out. You could plug in all the numbers. It's going to ask you for your taxes, the vacancy rate that you want to account for, the repairs that you plan on putting in, how much you plan on borrowing against the property, right? So if you're unsure of what numbers to plug in here, a lot of the times it means that you haven't had a conversation with a lender to understand what you qualify for and what rates look like. So reach out and have that conversation, get pre-approved, know what kind of down payment you need, what kind of interest rate you're going to get, so that when you're plugging this in, you're not being overly hopeful and maybe making a mistake. Better to know what you actually qualify for so that you can find the right property and transact on it as quickly as possible so that you don't lose the deal, right?
Yeah, one thing you showed but you didn't mention was the property walkthrough checklist, which will help determine what what the estimate is for the rehab on that as well. That's one of my favorite things on your site. So
Yeah, you do. You love this one. You always help me, you always reminding me of it. So we also have a walkthrough checklist, right? This is just something to help you kind of remember, like, hey, what do I need to bring when I'm going to view my properties? What do I want to check out? Maybe the window panes. I could write down my notes, how many of them need to be repaired, and maybe how much it'll cost me to repair it. And you could go through this checklist to make sure that you've checked out the entire property and everything is in order, or if it needs to be worked on. So at least now when you're going to, and you're talking to your contractors and whatnot, you have a good idea for what is needed, what you'd like to actually update in the property. Maybe they told you that the utility sink, it doesn't need to be replaced, but it could be replaced if you want to. Well, if you need to make an adjustment, you could have all your notes here and not have to go back to the property 5 or 6 times, as opposed to just being able to do it right away. And we also include, by the way, the human factor, which is another good one, right? Why is it being sold? Who's around here? What school district is it in? Because school districts, by the way, are a big one, especially for Texas and states that have that. Like I know New York is very similar, but a little bit different. But a lot of the times, like you could only go to schools within your district. And if you're not in that district, you can't go there, right? And we all know how important our kids are to us and making sure that we get them the best education possible. So as I'm sure you guys all know, that plays a big part in the value of properties.
you know, the other great thing about this is like, even if you're in a brand new house, I mean, there's things that are broken when you move into a brand new house. That checklist is great for any real estate property you're going into. And the other thing you can do is you can bring that with a lower offer to somebody and just say, yo, man, look at all this problems. Like this is worse than I thought. I'm going to offer you this. And it helps you actually like grind down a seller to a better price, which in the end, you make more money on. So
1,000,000%. And you could use all that, like you said, as negotiation tactics, right? Hey, you got all these things wrong, and now you're giving them a big list, right? That looks better. That looks like a lot more work to be done than just saying, hey, oh, I need to change the roof and the kitchen and blah, blah, blah. Now I'm giving you a list of things that I'm going to do. This seems to be the topic that everyone has the questions on, right? So what are rates and terms in today's market? What do they look like? So let's just dive into it and get you guys the answers you're looking for. So the first, when we say the word terms, right? Terms means everything about the loan, right? What are the terms and conditions that I am subscribing to by saying, hey, I want to take these funds? So the length of the loan is one of them, right? How long do I have with your loan? And the answer is that we have a 12-month loan. Now there are opportunities to get extensions, right? And now again, in every market, it's a little bit different. For example, 2 years ago, we were offering free extensions up to 3 months and things like that. It's a little bit tougher to do that, right? So you generally don't want to have to go to an extension. I never want to extend my deal if I don't need to. But we do offer the opportunity to extend them for a fee if you need 3, 6, or 12 months more in the project. The lender and the borrower both want to exit these loans as quickly as possible, right? You want to get out of it as quickly as possible because that means that you made more money on the deal. We want it also because it means that we got paid off sooner, that we have less risk out there on the streets as well. So we're both incentivized to help facilitate the quickest sale of the property. Interest rates, right? So interest rates vary significantly. This is based on the market, location, risk, and other factors as well. Now, in today's market, we are seeing rates by Express Capital Financing starting at 10.5% up to 12%. I would say most of our loans are going to be right around that 10.75, 11% mark. And again, this changes based on the markets, right? When interest rates raised, we had to raise bridge rates also, or else they were just never going to catch up. It wouldn't make sense. The markets have to adjust for each other. But I'm sure we will see lower rates in the future, and they will then again in the future go up again. So just have a lender that you trust, enjoy talking to, and have a good relationship with in your phone, so that once a month you guys can communicate, once a week you guys can communicate, depending on how many deals you do. And you can ask them, hey, how are rates looking? Have you seen any spikes? Have you seen any decreases? Anything I should know about? Any changes in your products and programs, right? Stay in the know, because the more you know, I might tell you something that's going to be that drastically changed in our products that's going to help you win your next deal, right? So, and maybe it's that interest rates drop, who knows, right? So keep the lender local, Make sure you're staying in touch with them to understand where rates are in today's market. Origination points. This is what is an origination point? It's a point is equal to 1%. So 2 points is 2% and 3 points is 3%, right? So origination points are points that are a percentage paid up front for originating the loan, right? That is how the loan officer gets paid. That's how the lenders are able to pay their overhead to actually originate the deal for you, right? We have underwriters on our staff, we have appraisal reviewers and everything else that we need in order to facilitate and make these deals happen. Fees are also costs that go into closing a loan, whether it's the appraisal, a wire fee, title fees, administrative fees, right? So understanding what a transaction looks like from a broad perspective is super important. Who I would recommend to reach out to for that is probably your local title company. Make sure you're talking with somebody that is actually informed about investor transactions, right? Because when it comes to just like anything else in any other business, you have title companies that specialize in home buyers, you have title companies that specialize in investors. Talk to somebody and say, hey, could you show me what a sample HUD would look like? How does that look? What kind of fees would I be paying? And they'll help understand that. Now, again, it's important to really talk to everybody to understand that, right? If you have a fee that's associated, sometimes you have a realtor that is going to charge you a fee for buying this property from them because they're not getting paid by the seller, but it's such a good deal that they know they're able to sell it that way, right? So you need to understand that that fee exists and that you are going to be needing to pay it. So it's not just the title company, it's really everybody in the transaction, making sure that you have a grasp on, hey, my lender, what fees do you have? My realtor, do you have any fees that I would have to pay? And if so, what situations do those look like? Your title company is going to have fees that you're going to have to pay, right? Because everyone has to work. So talk to each of them, make a list of them this way that when you're using these calculators, you already know what numbers to plug in and you're ready to go and underwrite a deal. And you'll know right off the bat now, hey, this deal is for me or this one's just not for me. As I mentioned, make sure you know what rates, points, fees to expect are. You will find a lot of that information out just by getting pre-approved, right? As a good lender is going to help you understand what you qualify for and why you qualify for it. Hey, because we need X amount of dollars set aside for closing costs, and I want to keep X amount of dollars in your pocket for the start of renovations, this is how much I'm willing to let you spend on the purchase. Got it. Okay, at least now you understand that and can make sure that you're making the best and informed decisions. The cost of financing a property impacts the bottom line of profits, right? So if I'm anytime, obviously it's very simple, right? Any expense is going to take off from my profits. So make sure that you know what that looks like. And for those of you who want the deal calculator website where you can reach it directly is located right here, which we'll be sharing this with you in the email that follows anyways. And it can be found on our main website in the business resources section. So what do hard money lenders consider when funding a property, right? So I spoke a lot about how it's so easy to get a hard money loan. It's so simple. The process is quick. Anyone could do it, right? But what are we actually looking for, right? What does qualify somebody? Maybe, and again, just because you can doesn't mean you should, right? I'm the first person to say that. There are certain people that are better off being in certain aspects of real estate than others. For example, if I am not so cash heavy, maybe I actually don't have any cash, but I'm willing to work my butt off and make sure that I'm doing everything I need to do to provide for my family. Maybe I want to spend time in the wholesale section until I raise some capital to use. If I'm really cash heavy, right? Like super cash heavy, I'm great net worth, great liquidity and all that kind of stuff. Maybe I want to be on the rental side because I don't want to work as hard and do as much work there, right? So everybody has their space to fit in, right? So what does the ideal person look like that would be doing fix and flips specifically, or any types of bridge financing to fund their properties and projects? So
Hey, let me ask you a quick
yeah,
question.
please.
How many people flip back and forth? Because when I used to do these surveys of investors that went to the foreclosure sales or that bought an online, REO properties, and a lot of times their answer was just depends. It depends on what I buy it for. and it depends on how much I end up putting into it. So like if you buy a property and you think you're going to get this great quick flip and make 60 grand in the example you showed earlier, but in the end, it's like, oh, I'm only gonna make like 15 grand, but I can do a killing here if I just rented this property, and maybe I'll wait, 5 years with this as a rental, and then I'll sell it and take the profits in as it's gone up in value or inflation has brought that up in value. Do you see investors making changes in what their kind of exit strategy is as they get deeper into a project, or like what's your experience there?
That is actually an amazing question, Mike. And the reason I say it's an amazing question is because that was actually a really big topic for the last year in real estate. So what happened is we just went through a market where property prices were raising so quickly. Investors were overbidding on properties, knowing that, hey, in 2 months, the next person is going to overbid that person anyways. My ARV will be higher than what I'm buying it for, and things like that. And people were getting overzealous in how they were doing transactions. And what that created was a market where a lot of these investors, once rates started to rise and people maybe started to get a little bit scared, or less buyers were in the market, what ended up happening is that prices weren't increasing as quickly anymore, right? They were still increasing to some capacity. Some places maybe even dropped a little bit. Some places were stable. But what happened is all these investors that bought these properties that they could not exit with a sale, maybe they weren't profitable anymore. Maybe they just didn't like the amount of money that they were going to make by doing it. I worked so hard on this project and now I'm only going to make 10 grand. I don't want to do it. Right? Or maybe they said, like what you said, which is, hey, I just see an opportunity to make more on my property through a rental than I would if I did a fix and flip. Now, with that being said, there's still another variable that we need to consider, which is the investor, right? Hey, if I took my last $40,000 and I put that into a project, and now I plan to hold it as a rental, could I really afford to do that? Sometimes the answer is yes, and sometimes the answer is no. Right? Maybe for me, the opportunity cost of not selling it and making that 10,000 and getting my initial investment back, which is going to stop me from making another investment, is actually more detrimental to me than having a rental property that's going to make me a couple $1,000s more a year. Right? So, and like you said, the answer is it depends. Right? Now, as a lender, I always try to take the approach of having 2 exit strategies. I want to know, if I decide to hold it, what is it going to look like? Am I still going to be profitable? Can I exit it this way? And if not, I need to make sure that I fix and flip that property. I need to make sure I flip it. I can't hold it because it doesn't work that way. And there's a lot of places. I'll take Brooklyn is a prime example of that. Like, there are little pockets of communities where property values are so high, $2 million, $3 million plus. But if I want to rent that property out, I will never make my pity payment, not because the properties aren't nice enough to rent for a high value. No, those properties would rent for dramatically higher prices in other areas. The reason is that the people that live in that area don't want to rent. They are buyers. This is a buyer's market, right? So and there were a lot of people that got stuck with those properties because they were in a buyer's market. Their anticipation was to sell the property. And all of a sudden now they couldn't sell for the price that they needed to. And if they rented it, they weren't covering their mortgage payment because nobody wants to rent there, right? So it does cause a little bit of a dilemma when markets shift and move. And that's why it's important to understand your market, know what you're getting into, making sure that your exit strategy is going to make sense, and doing it as quickly as possible to limit the opportunity for another variable to come up and throw me off course. I want as little as possible to get in my way of me buying and selling the property. If I could do it overnight, that would be the best case scenario. But we all know that work has to happen. So we try to do our best to make it happen as quickly as possible. Now, the 6 C's, right? So what are they? What are we looking at when we're underwriting a fix and flip? What's important to us? What do we care about? So number 1 is the collateral. What's the property? What's the value of it? How does it look? What's the condition of the property, right? Is it in great condition where you're just doing some lipstick and going to sell it in 2-3 months? Is this a tear down that you have a gut renovation where you have to tear all the walls down and replace everything? which goes into the next C, which is capacity, right? I said earlier that a lot of investors prefer to have deals where I need to gut renovate them, but does everybody have the capacity to deal with a gut renovation? If I've never done a renovation in my life before, am I going to go and do a $300,000 rehab? I'm not. I'm going to stay away from that. Let me crawl before I walk so I can run, right? So what's the capacity of the investor to actually perform on this deal? Is there do we see light at the end of the tunnel for when he buys this project to making it what his vision is, right? He has the perfect vision. Everyone, when they're selling us the deal, is always about how great everything is and how much and how great this market is, how amazing it's going to look when it's done. But all of a sudden, push comes to shove, you're in the deal, right? How are we at? Do you have the ability to navigate that and make that vision a reality? And that's important for us. We need to make sure that that could happen, or else we're stuck with the property that doesn't do good for us nor you. We don't want that for you either. Capital, do we have enough money to put down on the property as for down payment? Do we have the ability to start work once that's completed? Maybe, like I said, maybe you're doing it through credit cards, maybe you're doing it through your own funds, maybe you have a partner that's going to fund the start of the work. However you sort that out, that's okay. We just want to know that that's possible. Character. There aren't many things that'll tip off a lender when it comes to your character. I will say that the few of them in between are extremes, right? Don't be that person where you have a voicemail that says, "Hey, if you're a debt collector, please hang up," type of thing. Like, that's not what we're looking to hear, right? Are we going and saying, "Oh, he likes the Yankees and not the Mets. That's it. He's not getting money from us." No, we don't care, right? You be you. You are your person. We deal with all different types of people, but don't be somebody that you would not want to lend money to, is the way I say it. And then credit, right? How now do we allow for low credit borrowers? Yes, we do, right? Prime example for this is that everybody's best at something that they do. Mike is a professional in auction properties and understanding those processes. I'm a professional in understanding finance and how that goes. But am I going to have Mike do finance and me do auctions? We could probably learn it if you give us enough time, but I'm not going to ask us to do it overnight, right? So same thing when it comes to credit. There are some people that are really, really good at construction, but they're not great at managing their finance. So we'll step in and assist them, and we'll say, "Hey, look, you have great experience. You know how to get this project done. Your bills do get paid late, and we understand that you're just not great at that. Here's what we're going to do. We're going to set aside an account that's going to have some interest payments that you're going to pay in advance. That's going to go aside, and every month we will credit those payments towards to make sure that they're happening and you're secure, right?" Now, does everyone need that? No, not everybody needs that. That's how we would mitigate certain situations when somebody has a really low credit score, and we like the deal, we like them, and we want to help them, right? So we're not credit sensitive, but we do look at credit to understand you and understand who we're dealing with and make sure that we're putting you in the best situation for you.
And that kind of answers a question that was asked too from Monica. Is the loan on my credit report? I'm not sure if the loan is on their credit report, but she said, how important is a credit score for approvals? And that's a fantastic answer to that.
Yeah. So, and to answer her first question, our loans do not report to the credit bureaus. So you will not see a loan from Express Capital Financing. So if you're going to go and buy a car, or you're going to go and buy a house, and they're going to look at your monthly interest, your monthly payments, this is technically a business loan, right? I am not lending Monica money. I am lending Monica Investments LLC money, and then that company is what's responsible. So it does not go to.
Another question too. So Tammy had asked, can I use hard money to rehab a buy and hold? And I think the answer is yes and no. Obviously, you can't live in that property when you have the hard money loan, right? But you can use that that hard money loan for the rehab portion of it and then refinance it. But I don't think you can still live in it, right? It has to be a flip.
Correct.
Or a rental property.
Correct. So with us, it's just we don't allow we don't finance owner occupied properties. Owner occupied properties are a separate sector of real estate. There's a lot more rules that go into place there. So we are not licensed to lend to owner occupieds. Now, if somebody was doing a flip it made sense as an investment, and I don't know, something changed in the market, or they got a job in that state that they're doing it and they want to live in that property, they could always refinance it. And once it's refinanced, they can technically live in it. But if that was the anticipation from the start, I would say don't do it, because we only finance investment properties. Okay, so what does the actual application look like? Max, you gave me all the information I need. I understand now what that conversation is going to sound like. I understand what, the lender is going to ask me. Now I want to understand, okay, when I got on the phone with you, what does that actually look like? What am I giving you? What do I need to be prepared with? So the loan application is as simple as this. We need to understand the borrower. We want to know your information, obviously your name, email, phone number, basic info like that, as well as your track record. Is this my first investment? Is this my 20th investment? Do I do this on a daily, or is this something that I do with my free time? Am I a GC? Am I licensed to do construction? Am I a realtor maybe? Am I an attorney, which technically is also a licensed broker, right? All these little things, by the way, that give you credit, right? Who are you as a person? Who are we dealing with is the first thing that we want to understand. Having personal identification, your ID, important as well in getting pre-approved. We want to make sure that we are dealing with the right person. And the purchase agreement. Now, if you don't have the purchase agreement ready, an idea of what you're expecting, right? Hey, I'm looking at properties within the price range of 100 to 200,000. I am looking for A to Z. This is what I want to find. Okay, well, that's important too. But if you have a contract, that contract would go a long way, because now we know exactly what we're dealing with, the closing timelines, the purchase price, and which property it is, so we can look at that as well. The renovation budget, right? We'll give you a template for those that don't have it. If you have your own templates, we allow you guys to use it as well. A renovation budget is a line by line item, which I might even just pull up for a second to show you guys what it looks like. It's a line by line item, just showing you guys, telling us, hey, this is how much I'm spending on this particular item. So here, for those of you who have not seen one before, right? So it'll be the address of the property, the borrower themselves, and let's say you're doing demo. I'm going to demo the kitchen only, and it's going to cost me, I don't only have labor costs for this. It's going to cost me 3,500. There's no materials for that.
You're sharing the presentation. Did you want to share?
Oh, okay. I'm sorry. Let me stop then and reopen this one then, I guess. Okay. Do you see it now?
Perfect.
Awesome. So over here, you'll see like, hey, I'm spending on demolition. It's the kitchen only. I'm spending 3,500. The landscaping, I'm gonna plant new trees and replace the whatever, right? Okay, cool. That's gonna cost me $100 in whatever, and it's gonna cost me 2,000 in material, right? So you're gonna go through this, and at the end of the day, we're gonna say, okay, once you're done with this line item and it's 100% completed, we are gonna fund you 3,500. Now that's whether or not your cost was 3,000 or 5,000, right? So keep that in mind. If I go under budget, well, I can now use that remainder budget to improve the property maybe a little bit more and make it easier to sell. Or I could just choose to keep that as a profit and not have to spend it. But if you go over budget, well, Express Capital is not going to do that, because then what happens if you go too over budget? Now it's not profitable anymore, right? So important to stay within budget. You can add miscellaneous for something that could show up, and I recommend that. I would say about 10% is what you should do, just to make sure that should something arise, you're covered, you're not in a bad situation, and you don't have to worry about the whole project halting or not being profitable. So that is the scope of work. Let's go back to our presentation. Okay. And a CMA is not required, right? We do not require you to give us one. However, it's important that you tell us what you're estimating that you're going to sell the property for. A lot of investors will team up with and have a realtor on their team to make sure that, hey, what am I going to sell this property for? Talk to me about the market. Is this a good one? Is it not? So a lot of the times, if they are doing that for you, they're sharing with you and saying, hey, by the way, these are the 10 properties that we chose that are most like your property, and this is why we gave it that value of 375. Share that with us. That'll help us when we're evaluating it. Because if there's something that we see in there, we'll let you know right off the bat before it even gets to an appraisal. If it looks great and it makes sense, beautiful. But what we try, the reason why I like to still mention it, even though it's not required, is because as an investor, yes, you should allocate a budget knowing that you're going to spend money on appraisals that aren't going to go anywhere. Just keep that in mind. That's okay. That's part of the business. But you want to limit that as much as possible. I don't want to spend money on appraisal and not close on the property. I want to close on it if I'm buying the appraisal. So that'll help just make sure that the values are in line and you're actually coming from somewhere where, all right, I did something that this makes sense.
Well, and also it shows to the lender, to Express Capital that, hey, I've done my homework on this property. I do think it's a good deal, and they're going to look at it more seriously because you've done that homework. And I know I keep bringing up companies that are part of AltaSource, but we have a company called nestrange.com, like bird's nest, nest range. And I'll send out a code to everybody that'll give you 5 credits on there. But it's a site that basically does AVMs, the automated valuation model, and there's unlimited free quick AVMs on there. So it's a lot smarter than you'll see on things like a Zestimate on Zillow. It looks at a property and does all the market comps in that area and gives you a value for it. But the credits will give you what's called an advanced valuation that'll automatically just select properties in the market and give you what the values of similar properties are nearby, and then determine what we believe the value of that property is today as a ready to sell on the market. Or you can also select as a distressed property, so a property that's not in great condition. It'll find other comps that'll help you determine what you might want to make an offer on for it. And then there's also what's called the Nest Range AVM. And I think that uses 2 credits versus just 1 credit, but I'll send you guys, I'll send everyone that's watching this a code that'll get you 5 credits on there. And then you can go in and you can actually select your own comps, and it'll calculate what the value that we believe that property is worth. And so it really helps you do a lot of homework using AI technology to select the appropriate properties in the marketplace. And it's not going to give you that perfect, this is the wizard's number. But I like to say it gets you to second or third base without having to, swing at 100-mile-an-hour pitch. So we'll keep on the Yankees Mets theme there. But that's a company that we have where you can, it's kind of like a Carfax for a house. There's a lot of great information in there, including photos of those comp properties, and it gets some of that homework done for you in advance. So, if you're going in with a CMA, that can do probably half the work.
Absolutely. And I think, if I'm not mistaken, Mike, you did a small presentation on it in one of our previous webinars also.
I pulled up one of the Nest Range reports. So you can see what it was. Yeah.
Okay. Yeah. So maybe we'll try to reference that in the email that we send out to all you attendees. So we'll try our best to.
Someone had asked for links to those other webinars we did, and I promised that in the follow up to this, we'll put links to all of those in there.
Absolutely. We'll definitely do that. So now is the time for questions and answers, right? So anyone, I know we have a bunch of them sitting there on hold for us. So
I've been trying to answer, like there's still 20 that are open. So I think I've answered 24 and there's 20 that are open. So let's go with Elisa asked, did you say you don't record a mortgage for these loans?
No, I did not say that we don't record a mortgage. We do record a mortgage. What I did say is that we do not report these loans to the credit bureaus, right? So the difference between that, for anyone that just doesn't understand, is when I record a mortgage, I am actually telling the state and public knowledge that we are owed money on this asset. So anybody that comes and wants to buy that property knows, hey, this person owes money to this person. So before they tell me that I'm going to buy it cash from you and walk away with it, they have to know that somebody else has rights to that property beforehand. Whereas going to the bureaus is more of a credit factor, right? So when I go and I want to get a car loan or anything else, right, they're going to run my credit and they're going to want to see, okay, well, what does this person owe? What trade lines do they have open where they make a monthly payment to, so that they can understand, okay, well, this person needs to have $5,000 a month to make their payments. they're making $10,000 a month in income, they have $5,000 left over that now I'm understanding, do I think that that payment will come to me or not?
All right, I'm an overseas national. This is Michael. Would I qualify since I don't have a credit score in the US?
So what Express Capital financing requires to fund somebody that is not a US citizen is they need to be allowed to stay in the States, right? So that means that they need to have a visa of some sort that allows them to be in the States for the duration of our loan, right? So that means that if you're getting a 12-month loan, you need to be legally allowed for 12 months. If you have a work visa, an investor visa, things like that, those can work as long as you have a 12-month. And you don't need to have a US credit score. You need to have a credit score. It doesn't have to be through the form of a social security number. It could be through the form of an ITIN number.
Ah, great. This is from Neil. Can I use hard money to buy Section 8 project-based properties?
So yes, I would say the answer is yes, unless there's something that I'm missing to that question. I'm assuming.
I'm not sure if that means creating a ground up construction for Section 8 or not.
So even if he was doing ground up, the answer would be yes. So Section 8 doesn't change the form of financing that you can get. It actually is preferred by a lot of people because Section 8 is a guaranteed income by the state saying, hey, as long as this person has a voucher, if you rent the property to them, we're going to pay the rent for them, right? So it's essentially better. I like to see that. It tells me that, hey, whatever, if the numbers work based off of these rents and we're guaranteed it, even better.
Awesome. Alami said, where can I find help? A bridge capital company took a deposit of $14,000 from me, and after 3 months, I found out they cheated on me.
Oh man. So deposits are never something that you want to do when it comes to lenders, right? Most lenders are not going to require a deposit from you. I mean, really, I would say the answer to that is you got to speak to a legal representative on how you can get that money back. If they cheated you, it seems like more of a legal matter to me. But when it comes, what would you say?
I go to an attorney, yeah.
Yeah, but just to give you guys some info on that, do some due diligence. Make sure you're looking at the lender's reviews. Make sure they look legitimate. They have a website. You can talk to them. Maybe they have a physical location that you might be able to meet them at. A lot of our borrowers, we actually meet them at networking events because it brings that face-to-face component. We know who each other are, right? So find your lender from a place where you can trust them.
All right, Cecil says, if I have a lot free and clear and have construction permits, will you provide an advance to start the construction?
So we won't provide an advance to start construction. What could happen is if you own it free and clear, so this depends really on the numbers. Because with ground up construction, it's less about LTV and more about LTC, right? So the cost of the project. So it would be extremely different for me, let's say, to do a ground up construction project in New York, where I'm buying a lot for $400,000 or $500,000, and my construction cost is something like kind. Whereas I might do it in I don't know, Alabama. I might buy a piece of land for $5,000-$10,000 and then spend $200,000-$300,000 on the build out, right? So that does change a lot of these numbers. If you have enough equity in the land already, and when I say equity, I mean loan to cost, you purchased it for a decent amount, you might be able to leverage what you spent on that and get some of that money back so that you can start the project. So Cecile, I would highly recommend that you reach out to us so that one of our loan officers could understand the deal and help advise you best way possible.
All right, Monica asks, how quickly can you send proof of funds to buyers?
We understand that, like we said, this is a speed game, right? We're from when we're in the office, we're on the computers all day long, ready and willing to help all of our borrowers out. So we're able to provide POF same day, sometimes even within an hour, I would say. It's really a matter of having that first in it. Don't wait till last minute, right? Get pre-approved first, right? Because what we'll do is we'll provide you with a generic pre-approval letter. And then anytime you want and you go to a property and you want us to give you a letter for that property, because for example, maybe I got approved for 300,000, but I'm going to a property where I only want to spend 250. I don't want to show the seller that I'm qualified for 300. I just want to show 250, right? So you can reach out to us and we could provide those for you on the spot. That's not a problem at all. But get pre-approved beforehand before you find the property so that you're not running to check all these boxes off and making sure that we're available that second to make sure that that happens.
That's a great answer. There was a number of people that asked if they could get the actual Excel file from you. Is that something post somewhere, or that's something you use?
That's just something I use. So we actually, the Excel file is on the website. It's just done in a different format, right? It's done more for you guys as investors to read it the way that you'd like to see it and whatnot. So those are the deal calculators. All the equations that are on my spreadsheet are actually on our website.
Awesome. And Monica said, how much is each draw? I think that was already answered. It's really that line item on the sheet that we were looking at for the rehab.
So she might mean the actual draw cost, because there's a cost to draw money. So each draw is roughly, I think it was like 250 to 300. So we have two different variations of how you can request a draw. The first one is we have an app called SnapDocs. Oh wow, it's not SnapDocs. That's what we use for documents. I'm sorry, I forgot the name of it, but it's an application where there's a geolocation tag. You'll go to the property, you'll take pictures of line items that you request to get that you're requesting to draw on, and we'll go ahead and fund those upon receipt of the pictures. Or the second option is maybe you're not hands-on and whatnot, and you want us to just send an inspector out there. They'll go take the pictures, give us a report. So those reports cost money. The draws cost money in general. It's depending on how you go. It's either 250 or 300.
All right, so it might make sense to actually line a whole bunch of things up at once and do one draw.
Absolutely. Absolutely.
For homes that say cash only on Hubzu, can I upload proof of funds from Express Capital? That is a good question. I'll have to find out the answer to that. I'm sure that would suffice. But it probably depends on the amount of the purchase price of the homes. Someone from Hubzu might contact you and ask for additional proof of funds, just to show that you're serious about bidding in the auction. One of the things that is unique about auctions, and if you think about the dynamic, right? An auction takes all the bidders and they put it in one sale one time, right? And if you're the winning bidder in that auction, you're the highest bidder, and you decide, oh, I don't want to do that deal, you kind of just ruin the opportunity for all those other people that were bidding on it. They've gone on and moved on and consider like, oh, I didn't get it. I lost that property. It's not like in a standard arm's length transaction where you have an agent and you make an offer of 200 and they go, oh, they get an offer of 220. I think this other person gets it. Oh, hey, they fell out. You still want to offer 200? You want to go up to 210? And it happens like in 24 hours. In an auction, it doesn't really work that way, right? The point of sale is the point of sale. The bid is a legally binding offer on that property. And so we need to make sure that everyone that is bidding on those properties is fully kind of a legitimate bidder, because you don't want to be the person that lost a home to someone who doesn't end up buying it, right? And the same thing the other way, right? You don't want a bunch of people bidding on that property that aren't qualified to bid on it, and then you pay too much for it. So you look at it from both sides of the table there, and so we may have some different proof of fund requirements, but I'm not 100% sure on the answer to that. I'm 99% sure that it should be fine.
And even as the lender, I would advise that you do, right? Because a lot of the times, especially with auction properties, right, if there's a little bit of a hiccup or something like that, and let's just say, we're not able to meet the timelines for whether it be the borrower fault, the Express Capital, or whatever it is, it's always helpful to be able to have that funds available to say, okay, I closed on it, but Express Capital the next day refunded me the difference of whatever I wasn't supposed to put down, right? So that happens a lot when it comes to auction properties. It's the safest way to go. I always, again, that's a personal preference of mine. I always want to know that I have enough cash to close on it should the worst case happen. And then I could always get my money back from my lender a day, a week later to use those funds again for the next project, right? Again, especially when there's timelines and you might not be able to access the property a lot of the times, maybe for an appraisal. So there could be something that could get in the way of not being able to close right away. So just to be safe, bid on what you could close on. Once you have a good relationship with Express Capital and things like that, you could start to get, you know, a little bit deeper into certain types of projects and whatnot.
Keith had asked, are we pre-approved for a particular property? Do I have to get pre-approved for each individual property? Do you need a purchase agreement before considering a loan? I'm confused at the time as to the timelines.
And that's a great question because it's a little bit of both, right? And he actually, your confusion is for a reason, but I'll try to dumb it down, not dumb it down. I'll try to simplify it. So first, I want to understand. Hey, I understand, Max, that I'm talking to you, and I don't know what project I'm going to close on, but I understand what I anticipate doing. I understand what I want to do. So first, I want to know: do I qualify to buy a property for X dollar amount? How much do I have aside? Right? I need to get to know you. Now, all of a sudden, you're going to bring a project to me. And now I'm going to say, okay, Keith, I know that you are really good at A, B, and C. This project allows that to stand out. And that's what that's exactly what this project needs. Great. It's approved, right? Not only that, but if I tell you, Keith, you're approved for $500,000, but you bring us a project that is going to lose you money, right? We're not going to say to go ahead and do it and approve that. So in a sense, you do need a little bit of both. The first conversation is, hey, do I qualify? Would you actually work with me? And then what would that generally look like? And then the second conversation is, hey, Max, I got these 3 projects that I went to go look at yesterday. Which one do we think is best? Or maybe, oh, I found the right one. I want to proceed on it. Could you review the numbers and make sure it works? Tell me what it looks like, right? Because sometimes, again, we might even, like in our space, you know, and I want to say this very transparently, as lenders, we all say the maximums that we can do, the best that we can do, because we want you guys to know what our value adds are and where we could be helpful. Now, every time does everything work out that way? No, it's life, you know, that things happen, things come up, and or things can get in the way of us being able to give you the highest LTV. Maybe it's not as profitable, but you still like it because you see something else in the market that maybe we don't feel or see. So that's our ability to really get flexible and make the terms work on a lot of deals. So sometimes that's required. Sometimes we might say, hey, look, you know, we wouldn't normally do this deal, but if you put down Y% instead, we'll make it happen. So that's why there's kind of a need. Like, you should be talking to your lender a lot. You should be comfortable talking with them, calling them and just saying, hey, I just went to go see this. What do you think? Or this is what I was told. Does this make sense? These conversations shouldn't be uncomfortable for you.
Yeah, I mean, it's a partnership, really, right? You're leveraging the capital, and then they want you. I mean, Express Capital wants you to be successful. They want you to come back and do another deal, right? I mean, that's how they've become a very successful business. And it's the same thing with Hubzu. You know, you buy a deal on Hubzu and you make money. Like, we want you to come and buy another deal on Hubzu. You know, before I joined this company, I might have said this on a previous webinar, like the first real estate investment that I've made outside of just purchasing my own, you know, family home, I bought it on Hubzu before I worked here. And you know, I did it all myself. I didn't use a realtor. I didn't have like any contractor. And I was like, oh, these numbers are going to work. And in the end, I lost money every month on rent for 3 or 4 years. But real estate went up over that time. And when I sold it, I made my money back, you know, 10 times over. You know, it was a big learning experience, and creating these relationships, you get this group knowledge to where you look at a deal and you think this deal's great. And Max goes like, hey, have you thought about this and this and this? Oh, that deal doesn't look that great. I have this other one. That deal looks great, you know, and then together you're both successful, right? And so the balancing the experience and the expertise of the investor that's finding the property, the lender, and other real estate professionals and mentors, all those things make people much more successful.
1,000,000%. That's the beauty of real estate.
Yeah. Kyle, I see credit at the end. Do you run credit report for hard money loans? I think we answered that was yes, but it can be used creatively, and we can still find ways to finance those deals with lower or higher credit scores, obviously.
Correct.
Do you loan on commercial property? Michael wants to know.
Yes, Michael, we do have commercial programs available as well. For bridge financing, we offer for multifamily projects right now. Hopefully in the near future, we should also be able to provide it for other asset types. I believe we could also do warehouses right now. But when it comes to long-term financing, the DSCR products, we can cover almost any asset type except for land and unique assets like movie theaters and golf courses.
Office properties are going to be a little tough.
Oh yeah, yeah,
But you
especially
probably
in New
already read
York.
that in the New York Times, right? So, is it easier to get a loan on a cash deal purchased with cash?
So it would be the same, because essentially what's going to happen is you're going to purchase the property with cash. You're going to come to us and say, hey, I need the funds now. What might make it easier, if I'm understanding the question the way you're trying to say it, is that you're only going to borrow the renovation money. The answer is yes, that would be easier because now you're asking for less money, so it might just leave more money on the table. But as your lender, I would advise you, like we discussed earlier, leverage, 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 right? But again, leverage responsibly. So with that being said, you would ask us and say, hey, I bought this property for $100,000 and blah, blah, blah. Give me back 90 if you're qualified for 90 LTV. Give me back 90. I'll keep my 10,000 in the deal. Plus, you're going to give me the renovation money. So it's not really making the process easier. It's just another way of going about it so that you don't lose the deal if you have to close in 24 hours or whatever it is. But there is also risk associated with that.
Yeah, I mean, you'll still have to do the appraisal and all those things anyway. So,
Correct.
Alan asked, I missed some of the first part. Do you loan for new construction, which will be sold when completed?
Yes, we do. And as I mentioned, ground up construction is less on the loan to value side. It's more on the cost side of things. So if you reach out to us at Express Capital, which I'll show, by the way, our contact info in the meantime, if anyone wants to reach out to us, you can feel free to, and we can help make sure that we understand your projects and are providing you with the best product for you.
All right, Keith asks, I'm a licensed realtor in the state of New Mexico. When we write an offer to purchase, I presume that we should make the agreement subject to obtaining hard money financing.
Licensed real estate in New Mexico, when we write an offer to purchase, I presume that we should make the agreement subject to obtaining hard money financing. Correct, yes. Yeah, I don't know if it specifically has to be written as hard money financing or just financing in general. It depends on the state. I know every contract is slightly different. Like in Texas, they do differentiate. In New York, they don't. It's just financing. So depending on where you are, just follow, I would reach out to you. If you're a licensed realtor, I'm sure you know how they'd like it written.
Chantel asked, what tool is this to pull comps? I mentioned it earlier, it's called nestrange.com, NESTRANGE.com. And I will send the link to everybody who attended and put a code in there so everyone gets 5 free credits. I think we normally charge $10 a credit on that or something. So it's a $50 value to anyone who's just attending here. And then you can contact us if you want some sort of larger package on that as well. Irfan said, do I need renovation estimate from a licensed contractor?
Need and want are two different words. Need, no. Want, yes. I don't need it to be a licensed contractor. I can do the work if I want to, but do I trust myself to do the work? That's a question you got to ask yourself. Or do I trust that person to do the work? Is a question you got to be able to answer.
And then Tammy asked, what's the interest rate? I think that was answered a little bit earlier.
Correct. So right now, bridge rates are hovering about 10.5 to 12%, depending on the project, location, experience, etc.
Excellent. Patrick, do you include service debt in the process so I can make the payments until loan payoff?
So on a bridge loan, you're not paying the principal. I'm trying to understand what he's referring to when he says service debt in the process. But you're only making interest payments at the end of the loan when you either sell the property or refinance the property. The proceeds from the sale or refi is what's going to pay us back the principal.
What is the minimum credit score? Sorry if you answered it already.
So we mentioned it slightly. I don't think I mentioned the minimum, but like, again, I love the 680 plus, but I've worked with 550s. What really is an auto decline would say is like within the last 3 to 4 years, a bankruptcy, foreclosure, short sale, things like that would be the big declines. But again, you could also partner up with somebody and work with them, right? You could have a credit partner.
Oh, excellent. HF said, what is the website Rain? Well, the website for Express Capital is expresscapitalfinancing.com. You can see it in the email address here on the screen. And then you might be talking about Nest Range.
That's what I'm thinking about.
range.com, Nest Range. It's similar to another company we have called Rent Range. Those two kind of companies work hand in hand.
And I put it in the comments also for him, so he could check it out there. It's NESTRANGE, right?
Correct.
Okay, perfect.
Josephina says, can you borrow cash money 50,000 to buy a single family home before you put your current home on the market, which is worth 1.25 million with $400,000 loan? After I sell my home, I can get 500,000 in equity.
Can you borrow cash money 50,000 to buy a single family before you put your home on the market, which is worth more? So it's that you wouldn't need to have the down payment at the time that you're closing on the purchased property. So if your goal is to sell a property and buy a property, you would technically have to have those happen on the same day or have the sale happen, a day or two earlier, preferably, so that you're not running into a last minute crunch. What some people will do is, and I've seen this happen, especially in this market where, we were mentioning before how I had a property, I was going to flip it, but maybe I'm holding it for a little bit till the market corrects itself, but I want to be able to tap into that equity that I have there, at least, even though it's not as much as I wanted, but I want to tap into it so I could get the next project started. We've seen people take out cash out refinances. So we do offer a bridge version of a cash out refinance, which is a 12-month option if you plan on selling it in the next year. Or we have a long-term option, which is a 30-year product, which you could use to take the equity out of the property up to 75% of it, and then use that funds to fund your next purchase.
Let's see. Perfect. And I think one thing we should clarify is that you can't do a hard money loan on a property that you plan to live in. So if this is primary residence and switching to maybe downsizing to a smaller primary residence, then it wouldn't apply.
Correct. Greg actually asked a great one.
Yeah.
I'm surprised I didn't even think of this myself.
How often do you pull credit after credit has been pulled the first time? Because that can dock your credit a little bit, right?
Yeah, right. So as somebody that uses my credit for business a lot, right? Every time I get an inquiry on that, I don't like it, right? Is it going to kill me? No, but do I want 20 of them on my report? I don't want that either, right? So at Express Capital for bridge financing, specifically bridge financing, we do one credit pull that lasts 12-month period. So if we're doing business for 3 years, you would have done 3 credit pulls with us. If you're doing a long-term financing deal, a DSCR product, or any type of 30-year financing, our credit reports are active for 4 months. 4 months for repeat borrowers, 3 months for new borrowers. So in essence, I could do 3, 10, 20, 40 purchases in 3 months, and I only did 1 credit pull.
Oh, great. Oops, I pressed the wrong button there. Monica, sorry if you answered this already, but how can I get proof of funds to submit offers on Hubzu? I think we did answer that. And the question is that you should use that pre-approval from Express Capital.
Call that number below.
Yes. For buyers who've done 2 or 3 deals, what LTV do you offer?
2 to 3 deals, we're probably going to be between 80 and 85% loan to value. So you would potentially put down about 15% of the purchase price.
Josephina came back and asked, I mean, getting $500,000, it wasn't $50,000 because of bidding wars to get the property. I think it's pretty much the same answer.
Correct, yeah.
That might have come in before we answered the first one. John says, does Express Capital lend in all states?
We are a nationwide lender. We do not lend in all states. The only ones that we do not lend in is the North and South Dakota and West Virginia.
And that's most lenders, actually. I've
Yeah.
seen that.
West Virginia, because they have some weird laws, and Dakota's because there isn't really that many markets out there, and they do have some requirements of us. So it's like to go through, like there are some local people there if you are in any of those locations that'll help you out. It's just it's not so easy for other people to enter those markets.
Anonymous asks, can we place offers without a real estate agent?
In our market, we can do as we like. You can make as many offers as you like without a real estate agent. Do I recommend that? Probably not, no. If you're a new investor, I always recommend having a strong team, which includes a realtor, a title professional, an attorney, a lender, and we're missing one other one. Can't remember, but a realtor is a high valued person on your team.
All right.
And we'll try to keep this till the next 5 minutes.
Workshop, can we get to the recording? Absolutely, you'll get the recording probably the next day or so. We just need to get it all processed, and then it turns into a big link, and then we got to upload it somewhere, and then we'll be able to send out the link following the events, and you'll get the presentation too.
Exactly. I would assume probably by Thursday, Friday, we should be able to have it out.
Let's see. Elisa says, I'm a private lender here in my local market. How would I get information on becoming an accredited investor and potential rate of returns with your company?
That is a great question. So the term accredited investor is not something that's done by us. It's done by the SEC. So I would go to the SEC's website and get more information on how that works. And as soon as our fund is ready to go for public accredited investors, you will be seeing a lot of our ads out there, and I'm sure you'll get an email from us as well. So we'll keep you posted on that. But in the meantime, to find out if you're accredited, I would go to the SEC's website and they'll have all the information for you.
Excellent. I hope I'm saying this right. Adewal, I need further information on wholesaling. Are there websites for sourcing wholesale properties? I don't know if there are actual websites that are just wholesale properties. One of the things I'm adding to the Hubzu top like navigation bar is a link where you can just look at properties that are listed there by wholesalers. Right now, they're mixed in with what we call the signature sellers. So there's people who personally own properties that are selling them. Sometimes a person owns a property that has a tenant in it with a lease. Will list a property on Hubzu, because in many markets you can't put an occupied property on the MLS as an investment property with a tenant in it. And so there's a mix of properties under that signature seller tab, but today probably about 40 or 50 of the 100 on there are wholesalers. But that's a good source for wholesalers that are selling people direct, or selling properties direct to other investors. A lot of wholesalers sell to opportunity funds or to hedge funds. People have specific buy boxes. They go out and find those properties and sell them directly to those investors. But one of the things we try to do on Hubzu is work with wholesalers that find great deals out in the marketplace that don't fit into those neat little boxes. I like to call it thinking outside the buy box. And those wholesalers will put the properties on Hubzu for other investors to buy. So just create a free account on Hubzu. And when we do webinars and we do send out marketing emails, we highlight properties that are being sold by wholesalers all the time.
Mike, question. Have you ever seen the opposite? Have you ever seen somebody that was bidding on Hubzu properties go out and wholesale them before the time that they needed to close, or is that too soon of a time frame to really work through that?
We usually don't allow that. They have to put
Okay. Understood. Okay.
Because those deals fall out and then they blow out of the auction deal. And that's what we were talking about earlier, right? When you're the high bidder and you're not performing, and then you kind of took that deal away from other people.
Fair. No, that makes a lot of sense. But just to add in, Adewal, there are a lot of sites that you can go and buy lists. So it'll give you what to prospect, right? So for example, if I want to search for people that have recently gone through divorces, people that are in foreclosure, people that have a list pending on their property, if I want to buy a list of people that have owned a property for X amount of years, right? There are websites that'll provide that for you, where you could go and try to, find them. And then hopefully, you make enough money in wholesale where you're ready to start to do some flips, and you could buy some properties from Hubzu and we can help finance them for you.
Hey, Monica had asked, I'm unclear on all the fees. Is there a way we can see everything online? I think, Monica, you need to call Max and kind of go through exactly how it works, because you've asked a bunch of great questions on this webinar. And it seems like we need to get you in an investment fast. You're ready to go. Tammy, I have a tax lien that's I paid $1,000 in Indiana. Could I get funding for this? Want to rent it, worth 55K fixed?
Yes, you can. Well, yes and no. So the issue here that I see here might just be that the future value of 55K might just end up getting you a loan that's below our minimum. So that might be the biggest issue. But generally speaking, if that after repair value is higher, where I could qualify you for a loan that's 75,000 or above, then the answer would be yes for the tax lien.
But does she have to get the deed first?
I assume that she already has that, right? Because I'm assuming she bought the tax lien, which came with, where that came with the deed. But if I'm wrong about that, then you're right. She would need to have the deed first.
I think you have to get someone to sign a deed in lieu or something like that. And sometimes you pay the previous owner, or there has to be a portion, a timeline where it expires, and then you're technically kind of foreclosing on the property from the tax lien. So I think you're buying someone's unpaid taxes, and if they pay it back, then they become whole and you get the taxes. And if maybe they owe 15,000 and you bought the tax lien for 1,000, and then they pay out the taxes, you get paid, the 15,000 minus the 1,000 invested, you make 14 grand on the lien itself. But if they don't correct that lien, then you can take possession of the property. So I think you have to have the deed in hand before you could go that route.
That would make sense. And if that is the case, then yes, we would need the property to be deeded in your name or the company's name.
Tahima says, will you send your contract? Do you have a sample contract, Max? Or
No, I think she meant contact.
Oh.
Will you send contact? So our contact information is here. We don't have.
And if you're looking for me, I'm on LinkedIn, that's the easiest way to get a hold of me. Just look for Mike Jansta on LinkedIn, Jansta. And that's the easiest way to contact me. I interact with investors all the time on LinkedIn. Let's see. Anonymous, are the requirements like a bank? 2 years on the job, W-2.
No requirements like a bank, right? So we don't require W-2s, tax returns, or any of that. We went through the required documents in our presentation, which is the purchase contract, the scope of work, track record. We'll ask for a PFS, which is not even that detailed, and that's really it as far as a credit report. But that's really it as far as the borrowers are concerned.
All right, so
I think we answered the. Oh, there's one last one actually. That's a good one. Are you able to refinance from a DSCR loan to a fix and flip loan? What is typically required to do so? So I'm not going to go into the requirements because that could get a little bit complex. It's not really complex. It's just a lot of information. But more often than not, you would want to go from a fix and flip to a DSCR. In the rare case scenario that you had a tenant that really damaged your property, or you just have a really good asset that's you owned it for a really long time and now it's in a good stable in a good location that could be improved better, then yes, those we do see those and we do work with those. But I would say it's more typical to go from fix and flip to DSCR than the opposite. And it's pretty simple, by the way. It's the same requirements whichever way you look at it.
All right, great. Well, this has gone a little over 2 hours. This is the longest webinar I've done, to be honest.
Same here, and I really enjoyed it. We had over 100 people with us here today, which was really exciting. I think it was over 150, even if I'm not mistaken, at one point.
75 questions, so that's awesome.
Yeah, you guys are really awesome. Like, I appreciate all of you guys for being here and just putting time into yourself to educate yourself, learn more about investing. I know rates are high right now, and a lot of people are might be a little bit scared to invest. I would actually challenge that. There's a lot of reason that these are the best markets to be investing in. And even if you're not investing right now, but you're just learning and you hope to be one day an investor, kudos to you for being here, paying attention. You have some really good information that's been passed from Mike the past couple of webinars about understanding the auction process and understanding the different variables that come up in the transaction. I hope I shared, a lot of good information that can help you guys out when it comes to financing. And we hope to just be here and really share more information that's going to help you guys be the most successful investors you can be.
Yeah, super comprehensive. There's a bunch of questions that popped in here saying thanks and thanks and thanks. And so it's great to hear. And we're hoping to educate people here and make sure they're going in with open eyes and hopefully coming back with pockets full of money. So that's the whole goal of real estate investing. And I'll say right now, I have some cash that's on the sidelines and I'm looking for a good deal myself. At this time, I'm looking at here in Texas. I want to have something nearby since I have properties on both coasts. But, I just hate looking at, inflation going up and my money being worth less. And I want to convert it. I call it convert to dirt. So, get some of that money into real estate because that's a great hedge against the inflation we're seeing these days, and it's only going to get worse with all the money that's been printed. So, we're just starting to see the effects of that, I think. So,
and inflation is going to naturally appreciate all of our assets. So it's literally the appreciation-proof way to invest your money.
So let's get out there, find some properties, and get an Express Capital on the phone, and go to hubzu.com and reach out to me on LinkedIn, and definitely go check out nestrange.com. I'll send everyone the code to get 5 free credits, so you can just go pull some reports and pull it on the property you own, or pull it on a property you're thinking about, or you look at the information that's available and use those calculators that Max has on expresscapitalfinancing.com, and especially that walkthrough checklist, my favorite thing on the site.
Absolutely. Well, again, thank you all for being here. Have a good one.
Bye.